Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Tuesday, August 27th. After yesterday's sharp gains, we more or less had two-sided consolidative type trade in the overnight session. Currently have the wheat and the corn market down roughly around a penny, the bean market down around 3 cents, meal down $2, and the soybean oil market up around 10 points. We had our crop ratings out yesterday afternoon, and as expected, the crop ratings were down. We now have the corn rated 59% good excellent versus 61% last week. Trade was looking for 59% good excellent. Beans a little bit weaker. The trade was looking for 59. We got 58% good excellent. Last week we were at 62%. The core of states that continue to decline has been our core states as far as production needed, that being in Iowa, Illinois, Indiana, Ohio, fringe areas of Missouri, Michigan, and Minnesota. So obviously the trade is looking for additional rain as a result of the conditions going on down. Topsoil moisture levels in those states continue to decline in the short to very short neighborhood. So the trade's looking for an abatement of this heat that's ongoing and some rains to come on into those growing areas. As a result of those crop ratings, we are now having the trade starting to downsize once lofty yield expectations for corn and beans. At one time we were looking at a bean yield at something north of 43 bushels per acre, corn above 160. Now the trade is downsizing those yield expectations for corn, hearing anywhere in the range of 152 to 158, for the beans 40 to 42 million. As a result of that and those FSA acreage ideas that came out roughly 2 weeks ago, we are now looking at the potential, if we stay on this course, depending on what one's demand numbers are, a carry out in the corn anywhere from 1.5 to 1.7 billion bushels, which is currently below the current USDA estimate, and anywhere from 100 to 145, 50 million bushels for the beans. Obviously we're still manageable with the corn, but the beans become a little bit more dicey, particularly when we're now in our sensitive time period for beans as opposed for corn as far as development goes. Yesterday's rally produced little in the way of aggressive farmer selling here in the U.S. for corn and or beans. That'll become a little bit more important as we work our way towards first notice day coming on up on Friday for the September contracts. The cash movement was a little bit more aggressive down in South America in the neighborhood of around 1.5 to 1.7 million tons of beans and a little over 200,000 tons of beans in Argentina. The weather forecast, if that's going to be our main highlight as we move forward in here, it's still going to stay hot and dry over the near term. It sounds like in the 6 to 10 day period we're going to get a little bit of a cooling off period coming in here, but not much in the way of rain, and then we may have a chance of rebounding back with the warm and hot weather in the future as far as later in the period. So once again, we're kind of cooling off the temperatures, but we need the rain. It doesn't seem like that's in the forecast. As a result, we're seeing that the beans and the meal traders, as far as the managed money goes, continue to add their long positions, and we're getting people out of their short positions in wheat, corn, and soybean oil. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.